Hi everybody, welcome back to our video lecture series on Statement of Cash Flows. In the prior video, we completed the operating activities section of the Statement of Cash Flows for Acct Company. In this video, we'll prepare the investing and financing activities sections and complete the statement. This lecture is a continuation of video lecture 12.6. You will need either the PDF version of the worksheet or the Excel workbook for Acct Company that you started in that lecture. If you don't have it, please print or download the necessary materials and go back to video lecture 12.6 so you can catch up before continuing with this video. So here's the Acct cash flow statement where we left off at the end of the last video. We've completed the cash flows from operating activities section. Let's go find out what's next by referring to our format, Company. Cash flows from investing activities is next. So let's type that line in. I like to skip a line between the three different sections. I like to skip a line. It kind of makes it pop out a little bit. But we need to know what to put into this section. So if you'll remember correctly, the Exhibit 12.4 on page 455 says that if we're trying to complete the investing section, changes in long-term assets that arose because of receipt of cash or payment of cash go into the investing section. Looking at our balance sheet, we did have an increase in equipment of $30,250. It looks like we might have acquired some equipment, but we don't know whether we acquired it for cash. So let's go down to the other information, and it says purchased equipment costing $30,250 for cash. So we spent cash in acquiring equipment. So cash paid for equipment is $30,250. In the investing section, cash paid for equipment, $30,250, and remember that in the activities section and in the financing section, if money went out the door, it's in brackets. If money comes in the door, it's positive. These sections do not follow this rule that we went over in the last video. Cash going out, put it in brackets. Cash coming in, put it as a positive number. And that's the only long-term asset. We've already taken care of the depreciation expense in our operating section. So we don't need to do anything with accumulated depreciation. So that's the end of the investing section. We can get some totals. Net cash used in investing activities then is $30,250 in brackets because cash was used. Looking at again, what's next? Cash flows from financing activities. Let's type that in. Okay, we have the section header here, cash flows from financing activities. Now we need to know what to put in this section. And again, you can go back to Exhibit 12.4 when we're building the financing section of the cash flow statement. We want to take a look at changes in long-term liabilities and in equity and consider those changes that arose because of a payment of cash or receipt of cash. Let's go to the balance sheet and take a look. We don't have any long-term liabilities. We had two short-term liabilities which we took care of in the operating section. The next section is equity, common stock. and paid in capital in excess of par for the common stock. It looks like we had an increase in equity in connection with the common stock of $15,000 plus $48,000. Which is a $63,000 increase in equity. Now what we need to do is to find out what caused that increase. So let's look down at the other information, and it says we issued 3,000 shares of common stock for $21 cash per share. Let's do a little quick math here. 3,000 shares were issued for $21 a share equals $63,000 cash received. And that does account for the entire change in the equity account. Cash received from issuing stock was $63,000. Let's get that onto our cash flow statement. Now, the other thing that typically affects equity is payment of dividends. So let's go check and see if we paid dividends. Now, I taught you how to calculate how much dividends were paid, but let's take a shortcut right now and take a look at dividends paid with cash, $60,000, and let's just use that number. Cash paid for dividends, in brackets, $60,000 because cash was going out. Net cash provided by financing activities then is $63,000 coming in minus $60,000 going out, leaves net cash provided by financing activities of $3,000. And that gives us the totals of cash provided or cash used by each of the three activities that are required to be reported on the statement of cash flows. Let's go find out what's next. We need to calculate a net increase or net decrease in cash. And we do that by adding up the three numbers, cash provided or cash used by the three sections. Let's go take a look at what we've got over here. Cash was provided by operating activities in excess of $57,000 and also provided by financing activities for $3,000, so that's 60 some odd thousand coming in, and $30,000 was used for investing activities, so it's obvious that we have an increase in cash. More cash came in than went out. So we have a net increase in cash. Plus minus plus equals a net increase of cash of $30,350 for the year. If our cash increased by that amount during the year, and we had beginning cash balance, if you add those two together, you should calculate your ending cash balance. So let's get some numbers in here. We're preparing this cash flow statement for the year ended December 31st, 20X2. So the beginning cash balance would have come from the prior year balance sheet. So the words I'm using are cash balance at December 31st, 20X1. Now we need to find that. Let's go to the balance sheet. Here are the two balance sheets. Here's cash. Here's cash balance, December 31st, 20X1. So $28,400. I dropped the cash balance as of December 31st, 20X1 last year, popped that in here, added the increase in cash during 20X2 to the beginning cash balance, and calculated on my statement of cash flows that we have a cash balance at the end of the current year of $58,750. And my cash flow statement is done, but we are not done with our work because we have to check and make sure that this number is right. And we do that by looking at the balance sheet again, the ending balance sheet. Cash on the ending balance sheet is $58,750. That should agree with the calculated ending balance of cash on our cash flow statement. It does, so I know I don't have significant errors on my cash flow statement. Remember, we talked about dollar signs, dollar sign by the first number in each column, and then we did a calculation, kind of a final calculation, by calculating our increase in cash. Go ahead and put a dollar sign by that, and then a dollar sign by your final answer. And know that these dollar signs are the way that your book recommends the dollar signs be reported on the financial statements. I kind of agree. I think that that's correct. But some companies do have a different way of reporting their dollar signs. But the monetary principle under U.S. GAAP says that we must report our financial statements in the U.S. dollar. And so we're using these dollar signs to tell the readers that these are U.S. dollars. Well, that's all for this video. When we come back, we'll work through another cash flow statement for an increasingly complicated business. See you next time.